Hello, beautiful people. Welcome to another brand new episode of the ITU Forex class. As you can see on the screen, in this week's class, we're actually going to be talking about the truth behind Forex trading income. And not just Forex trading, but trading the financial markets or speculating within the financial markets, the income you're going to earn from that type of activity, that kind of business. The truth behind it is what we're going to be talking about in today's class. Okay, so once again, welcome to this week's episode of the ITU Forex class. We're glad to have you here. And if you've been attending any of these classes, I'm pretty sure you know by now that I try as much as possible to actually tell you the truth behind trading in general, not the sugar-coated version or the guru version that seems to just appeal to traders who are in it to get rich quick, which isn't the reality about trading. Okay, you could get rich quick, but before you actually reach that stage, you must have probably laid the proper foundations for you to do that. Okay, so let's get to it. So before we talk about this, let me quickly go to the whiteboard and show you a couple of things, okay, that I would like to use to explain this to you. Okay, so most of the people who get started with trading, assuming that they have a job, okay, they are not just people who are just getting into trading like I was when I started, who's just a student without a reliable source of income, okay, other than getting allowances from the family and friends and all of that. So if you are getting into trading with a proper job, you've got a job, then obviously that job, it is not beyond realistic for us to assume that that particular job, okay, you must have been able to get that job, and the compensation you're getting from that job is maybe a monthly salary. Now, if it's anything like a regular 9 to 5, okay, then that salary that you're going to be getting is going to be consistent. Let me quickly clean this up a little bit. It's actually too big, the ink. Okay, so I've got my pen here. Okay, so that income that you're going to be getting from that job, more often than not, is going to be a consistent income. Okay, so let's assume that you've agreed with the employer that you're working with to be paid, let's say, just for example purposes, to be paid something like 250,000 naira per month. Okay, now if it's anything like I keep saying, like if this is anything like the regular 9 to 5 and this was your salary, okay, then it is not beyond reasonable for us to assume that what you're going to get paid in month 1, okay, is the same thing you're going to get paid in all the other months down to month 12. Okay, so you're going to be getting paid the same 250 down to month 12. Okay, now because of this orientation, a lot of traders who have never ever let me just put it this way, a lot of people who are getting into forex trading who have never ever had any interactions with the financial markets in the past, when they approach trading, they assume that the income they're going to be making from trading is also going to look like this, which is, to be fair, I mean, if working a regular 9 to 5 is all they've done, then to be fair, that's kind of the way they know how to make money. Okay, so it's not uncommon for them to think that trading is also going to pay them like a regular salary job. But this couldn't be far from the truth, because if you've been trading the financial markets, then obviously if you've learned how to trade it the proper way from reliable mentors who know what they're doing, then you obviously know that even the pros, the ones who've made a killing trading the financial markets, they don't make a consistent income through trading the financial markets. And this is not because they don't know how to trade. Far from it. In fact, some of these guys are the absolute best in what they do. But it's just the nature of the trading environment that it so happens that you could do all the right things in trading. You could, have a good trading strategy, follow your trading strategy with relentless discipline, have a plan, stick to the plan, do all of the right things, and you'd still end up in a month not just not making money, but then you could lose money in that month doing the right thing, doing everything you are supposed to do. And this is not because you did anything wrong. Far from it. You did everything you're supposed to do. This is not uncommon in trading. And somebody who is just getting started into trading, and this is one of the things that really frustrates a lot of traders with trading. Someone who is just getting started, who breaks all the rules. He trades without proper risk management. He trades without a trading strategy that he's back tested. He's strategy hopping. Okay, so he trades one or two trades with one trading strategy, and then if he encounters a couple of losing trades, which are inevitable by the way, he dumps that trading strategy and finds the next one and trades with reckless risk management and all of those things. And you could have a trader like this breaking all of the rules and then making money in 1 month or whatever, while you follow all of the rules but you end up losing money. And so this could really mess with a lot of traders' heads, because they'll be like, look, I'm doing all of the right things and I'm not making money, and somebody who is doing all of the wrong things is here making money. But this is actually kind of like a segue before this guy ends up blowing his account. And if you continue doing what you're supposed to do, following your rules, trading with an edge, doing all of the right things you're supposed to do, then eventually this is going to compound, so that even if you have a losing month doing all that you're supposed to do this month, the subsequent months you're going to definitely, just like you have losing months, and it's inevitable to have losing months, there are months where you're going to have a winning month, and there are months where you're going to have a break-even month. This is just the reality of trading. Okay, so going back to what we're talking about, most of the people who get started with trading, they wrongly assume that trading income is like a salary income. And so they think that because of that, if they were getting a fixed, steady salary amount month in, month out, as long as they clocked into their job, then if they were to invest money into trading the markets, then they should expect something similar as an income, a fixed salary. But you'd see that even the best trading strategy in the world, there are months where you'd have a profitable, let's say you make serious profits, and there are months where you're going to lose money. Okay? And there are months where you're just going to be at break even. You didn't make a lot of money and you didn't lose a lot of money. It's all over. Just that's how it is. This is the reality about trading, and this is the truth about Forex trading income. You're going to find trading extremely frustrating until you make peace with the fact that this is how trading is. You cannot consistently make money month in, month out without experiencing losing months. Of course, like with everything in trading, there are caveats, but I want you to first have a solid understanding of the fact that this is the reality of the trading environment. Okay? And so once you make peace with this fact, then we're going to look at a couple of tricks that professional traders use to dampen the effects of those losing months, so that most of the times they don't even affect you all that much. So let's move on. But now, I just want you to know that, again, like I told you, this is the reality of trading. Whichever trading strategy you use, it is not uncommon for that trading strategy to have losing months, just as it is possible for the strategy to have winning months where it makes money. Okay, thinking that it's going to give you a fixed income each and every month that's not in line with the reality of the nature of the markets, and that is only going to make trading frustrating for you if that's the kind of mindset you come into trading with. Now let's talk about the techniques that professional traders use to dampen the effects of these losing months that are inevitable that we just talked about. Okay, so let me give you an example. Okay, let's go back to the whiteboard. You see, remember I told you that there are different phases that the market trades in, that different phases that the market experiences. There are times when you're going to have a trending market environment. Okay, so we're going to have a trending market environment, trending markets. Okay, and there are times when you're going to have consolidating markets. Okay, there are times when you're going to have a ranging market. Okay, these are mainly the characteristics, the conditions that the market is usually going to exist in. Now, if you've been a regular of this IT Forex classes, then by now I'm pretty sure you're conversant with the fact of how the market, what a trending market looks like. Because when a market is trending, usually what that signifies is that the market is going to be making, in an uptrending market, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, as long as that trend is intact. For a downtrending market, it's the opposite. The market is going to be making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, as long as that downtrend is healthy and intact. Now, for consolidating markets, also obviously, I should mention that it doesn't look all this, this perfect on the charts, but this is just to give you an understanding of what we're talking about. Okay, so for consolidating markets, usually you'd find it that price is struggling to move in one direction, and so this would be when price is going to be forming things like a triangle, ascending triangles, descending triangles, and all of that. This is what consolidating markets would look like. And for a ranging market, this is when you have price action just bouncing in between levels of horizontal support and resistance, and all of those things. Okay, now for each one of these markets, there could be an approach, a trading strategy that you would use to exploit these market conditions. For example, when the market is trending, then when you use a trend trading strategy, it only makes sense that usually, even though you're going to still get losing trades, even if the market is trending and you're trading with the trend trading strategy, but what would usually happen is that the losses that you'd encounter from those losing trades are going to be more than compensated by the winning trades that you're going to catch. And so eventually it will all balance out, so that even if you end up taking more losing trades than you win, the profits from your winning trades are going to be so large that they would compensate, more than compensate, for the losses from your losing trades. Okay, and that's how you're going to end up making money. Okay, but then when you try to use the same trend trading strategy when the market is consolidating or ranging, obviously, because a trend trading strategy needs the market to move clearly in one direction for you to become profitable, when the market is not doing that and it's ranging, for example, or it's consolidating, then it's likely going to hit your stop loss more than it's going to reach your profit targets. And so trend trading strategies usually struggle when the market is consolidating or ranging. Okay, so when the market is trending, yes, you're going to get winning trades, but you're also going to get losing trades, because losing trades are inevitable. But then at the end of the day, it's more likely, there's a high probability that you'd end up making a profit with a trend trading strategy when the market is trending than you would make when the market is ranging or consolidating and you're using a trend trading strategy to trade the markets. On the flip side, when you're using a range bound or mean reversion trading strategy, or a range bound trading strategy, or support and resistance pure price action trading strategy to trade when the market is ranging, for example, then you're likely going to get much more winning trades than you would when the market is consolidating or ranging, for example, in this case. So all of these market conditions that I just talked about, there are trading approaches or trading strategies that tend to work best with them. So what professional traders tend to do is that they know from experience, obviously, that when they're trading the market with a trend trading strategy and the market is trending, then obviously they are going to make most of their profits during that market condition. And so they would capitalize on trending markets with trend trading strategies, and that's when they are going to get a lot of those winning months, make a lot of those profits. But then when the market is not trending and it is ranging, for example, they will be trading with something like a range trading strategy. And so even though their trend trading strategy would be losing money because the market is not trending, when they are trading that in a portfolio together with a range trading strategy, when the market is ranging, when that trend trading strategy is losing money because the market condition that favors it performing very well is not in session, then that range trading strategy is actually going to be giving it profit. And so what the trend trading strategy would be losing would likely, hopefully, be made back and then some by the range bound trading strategy. And so if you're trading these two on one account, when the trend trading strategy is struggling to make money, or when it is in drawdown and losing money, the range bound trading strategy is profitably going to be making trading the markets and then covering for the drawdown from this one. So when you combine both of these trading strategies into a portfolio, then this is going to dampen the effect of drawdown. And this is one of the techniques that some traders use to ensure that they get, very little losing months. Because when the market is trending, their trend trading strategy is going to be printing cash. And when the market is not trending, their trend trading strategy is going to be experiencing drawdown. But if they're trading a range trading strategy in the same portfolio, then that range trading strategy, when the market is not trending, is likely going to be printing cash. And so it is going to bring in profits, and it's going to reduce the drawdown from that trend trading strategy. But then when the market resumes trending again, that range trading strategy might likely be in drawdown and maybe losing a little bit of money. But that's not a problem, because the trend trading strategy by then is making profits and is going to dampen the effects of the drawdown from that range trading strategy. So this is one way that professional traders use to combat the effect of drawdown, so that whether the market is trending or it's ranging or it's doing whatever, they've optimized their trading portfolio or their trading methodology in such a way that they are hopefully going to get consistent profits from the market. But when I say consistent profits, this does not mean that if they made 10% this month, that they are going to make the same 10% next month and the month after that. No. In trading, you don't know how much you would earn until the month is out, for example. Because you could be up 20%, and before you know it, if hopefully you're doing proper risk management, then you're likely going to lose a little bit of that before the month ends. You don't know how drawdown is going to affect you. But even forgetting about drawdown, it's not uncommon for you to see a trading income that you're up 10% one month, then you're down 2% the next month, or you're up 36% one month, and it's all over the place. That's how a realistic trading income is. And that's why I made that first comparison we did earlier on in the video, where I told you that trading is so different from a regular 9-to-5 salary job. Because a regular 9-to-5 salary job, it's not out of line for you to expect to make a certain amount of money each and every month. But with trading, that couldn't be far from the truth. Because like I told you, you could do everything right, follow your trading plan, trade with proper risk management, using the right trading strategy, and still end up losing money or ending up at break even. It's not because of any fault of yours, it's just how trading is. Whichever trading approach or trading strategy you use, there are going to come points in time when it's going to experience drawdown. You can't escape this. So the earlier you make peace with this reality, the easier trading is going to be for you. Because that would mean that you've understood the nature of the environment, the nature of the beast, and how trading works. Okay? So this pretty much brings us to the end of this week's edition of the class, and I sincerely hope that you've got a takeaway from this class, because this is one of the things that a lot of those so-called gurus are not going to tell you about trading. They would make you think that, okay, I made X amount today because I'm a day trader, and they would make you think that that's what they make each and every day. While that couldn't be further from the truth. There are days when you'd make profits, there are days when you'd lose money, there are months when you'd be profitable, and there are months where you'd make nothing. In fact, there are months where not only will you not make nothing, but you end up losing a little bit of something, even if you did everything right. The moment you understand that this is the normal reality of trading, and there's nothing wrong with you assuming you're trading with an edge that you've proven that it actually works, and you are not breaking its rules, you're trading with proper risk management and all of that, then this is just the normal ebbs and flow of trading. Okay? So again, Before we wrap up the class, I would like to use this opportunity, as usual, to invite you guys to test out our suite of ITU bots, which are expert advisors that are designed to look for low risk, high probability trading opportunities on your behalf, and then place those trades, manage them with proper risk management, and actually get you up and running in no time. So if you're interested in any one of those, please feel free to reach out to us on any one of our social handles, and we'll be more than happy to assist you set everything up step by step in an easy and easy to follow fashion. Okay, so once again, thank you for taking time out of your busy schedule to attend this class. I look forward to seeing you guys in next week's edition of the class. Have a wonderful rest of your week, and God bless you all. Cheers.